So why is whole life insurance a bad investment? Well, I'll give you one, it's not an investment. But two, let's be honest, trying to buy a policy from Jake at State Farm, with his belly hanging over his belt, because all insurance agents have bellies that hang over their belts, right? They're wearing their little crappy, either their polo shirt because it's dress down Friday, or they're wearing their little dress shirts because they're trying to impress you. The truth is that it's not the kind of thing that an insurance agent's going to give you. It's not a great investment. In fact, it could be the biggest ripoff in the world if you get the wrong policy. But if you get the right one, if it's designed the right way, you can actually get this to work for you, not as an investment, because it's not an investment, but actually as a great savings account vehicle for you. Okay, so let me start off. Again, one, this is not an investment. Now, maybe it's an investment of time and money, so to speak, not an investment like in the stock market. Okay, I get that. The money you're putting out in those premiums for that policy, depending on how this policy is designed, could be good or bad. I'll give you an example. So I started out as a financial advisor back in the day, right? Did that for 4 years, realized that basically everything the financial advisors teach you is kind of crap, right? It's really a good way for them to make good money. In fact, they'll make more money than you will from the investment advice that they give. And so eventually I realized that this is not the place for me. And so when I left being a financial advisor, I got into real estate investing. And in that real estate investing world, all these investors were raving about this infinite banking concept, right? A Nelson Nash type concept created. Talking about using whole life insurance to use it with your investing. Now, I didn't understand everything completely. I'll be honest, I didn't get deep into it. In fact, the honest truth is, I thought whole life was the biggest waste of money ever. As a financial advisor, I always taught people that's what it was. I didn't know if it was. I just retaught what other people taught me, right? But I would teach that all the time, is that, no, whole life doesn't make you any money. Go invest in the stock market. However, I started to realize that as time went on, and with what I learned from Nelson Nash's book, is that you can actually use this money to create your own bank, as they say, where you can flow money through all the time. That's why it's infinite, even though it's not really infinite, because you're not going to live forever. Sorry to say this. Spoiler alert, you're going to die someday. So anyways, so all that money was supposed to go in. So I went to an insurance agent that everybody recommended, and he told me, here's how it gets designed. And he said, you want to get the biggest death benefit you could possibly get. Not realizing that he gets paid more the bigger the death benefit is. I went and got the policy through him. I just said, you know what? You obviously know what you're doing. I was a financial advisor. I never sold these things, so I'll take your word for it. And he kind of became a friend. So I started to trust him like you would trust any friend as well, especially if they're in this kind of industry. Well, a few years later, as the recession hit in 2008, I was strapped for cash. I didn't have the money to keep paying $1,000 a month into these policies. And so I had to let it lapse. I had to let it cancel, because I couldn't afford the premiums anymore. Well, I was pretty bummed by that, because I had paid $25,000 into that policy only to find out that I had nothing, right? It was like the most expensive term insurance ripoff, but it was called whole life, right? And that really bothered me. However, I just figured it's my fault, the recession, everything going on, it's just what it is. It was just months later that I realized, I was talking to a friend who also bought a policy from the same guy, found out that we could have actually designed it better to where I wouldn't have had to lose it during the recession. I could have let it keep going without even having to pay into it. It would have kept funding itself. Well, long story short, I finally went back to him. Now understand, this whole time, guys, I had an insurance license. I was life insurance licensed through this whole period. So I went and did my own research. I went and ran my own numbers. And guess what I found out? I found out that this guy lied to me. I could have had cash in here from day one, but I didn't. Why? Because he told me if I put in any more money, I'll trigger taxes. But what he didn't say is that I can do some things, click a few buttons. Literally, he just had to click a few buttons that allowed me some flexibility where I could have had a range of what I had to pay into it, and it would have money from day one, not have to wait 3 years to have some cash in there. So I went and confronted him about it, knocked down all of his little objections. He was trying to say about, well, you need this for your human life value and all that kind of crap. Well, it gets to this point where I say, okay, here it is. I beat your numbers using the same numbers, apples to apples. I beat your numbers. And in fact, I would have been better off having this kind of policy versus the one you sold me. And here's what he said. He said, Chris, I set it up that way because I couldn't afford to cut my commissions. Well, that's exactly why I won't use you again, buddy. And I never sent him a referral again. He's now left the business. He now works for a bank. So just so you know, don't go to the bank. Create your own infinite bank. Don't go to the bank. No, I'm just kidding. Banks are great. But anyways, he left the industry eventually, right? Because it's the thing, insurance agents, they work for themselves, right? They work for an insurance company to make them profits, but they ultimately are working for themselves and their families. There's nothing wrong with them making money. I just have a problem that you're not upfront. I actually prefer that if you're gonna do this, do it in a way that actually ensures that I'm gonna get the biggest bang for my buck, so that I don't lose a lot of money in these things. And so when you hear all the criticisms about this being a bad investment and all that kind of stuff, it's true. If you set up the traditional way, it's not good. Now, let me also get into who this is not for. This strategy is not for everybody. Despite what you might hear online, this strategy works for a certain group of people. Now, can it work for a lot of people? Yes, but not everybody. For example, number one, if you're over the age of 70, I would recommend that this is not exactly the strategy you want to use. Now, if you still need life insurance, that's one thing. But there's different ways to design it where you don't design it the way we're talking about here. If you're over the age of 70, the insurance costs get a lot more expensive. And just so you know, if you're in your 60s and in good health, this is still a good option potentially. But if you're in your 70s, not so much. Two, if you're in bad health, so for example, if you're in a situation where maybe you've had a heart attack recently or cancer or something like that, heaven forbid, I'm grateful you're still here, but maybe you've had something show up recently that hasn't been good, medically speaking, or maybe you're very overweight, or maybe you smoke or something like that. Those things will make it so expensive where either it'll cost you a lot of money, or two, they're gonna reject you. They're gonna deny you coverage. Yes, believe it or not, insurance companies don't wanna cover everybody. They wanna cover the people that are healthy for the most part. So if you're in bad health, it's probably not a great option for you. If you have a family member who's in good health, could be good for them. I had one client, he weighed over 300 pounds, he was in his mid-50s. He already knew it was gonna be expensive for him. But he said, Chris, I have my wife, she's 52, and she's in great health. I said, awesome, then she's gonna be better off. And plus, by the way, women live longer. One advantage women have over men, they live longer, which means their insurance, even apples to apples, are gonna always beat the men if they're the same age and same health rating. So women get the better policies. So I said, great, let's do it on your wife. He's now paying in over $110,000 a year just for his wife's policy because he knows that's money he could put in and it's protected. By the way, recently, he actually got in a lawsuit. He's involved in a lawsuit right now. He now feels safe because his money is in that policy with his wife. That's the one place he keeps putting money in because he knows even if somebody sues and if they happen to win, his money is still safe. So in that way, that's a great place to store money, especially if you want to protect it. Not just get guarantees, but also protect it from people trying to take your money, especially if they're sue-happy creditors or criminals that way, right? And there's another thing to know too. If also you're in a place where you don't have a lot of money every month, if you don't have a lot of extra spare change, if you're paycheck to paycheck, if you can't save at least $5,000 or $10,000 a year, I wouldn't do this. Just so you know, you can get a term insurance policy that's convertible, and guess what happens? When you do that, even if, in fact, I'll just tell you this story. I had a client who did that. I got a term insurance policy, and then the next year he came in asking me for a whole life. I forgot about the term insurance policy, so we went to get a whole life policy on him. Well, guess what? Whatever happened between the year before when she had perfect health and the year after, they wouldn't tell me because it's HIPAA rules. Whatever happened, she was uninsurable. They would not insure her at all. They denied her any insurance. But then when I went to search on her name, guess what? I found that we still had a term policy that was convertible. That same day, even though they just rejected it, I went to them and converted her term insurance policy to whole life to get the top health rating, and they approved it. Why? Because if you get that health rating locked in now, even if something goes wrong, you're protected. I had a client that had brain tumor later on, could still convert and get the perfect best health rating because he had that term insurance. So even if you may not be able to afford it, guess what? It can actually work out if you have a convertible term policy that you can convert to whole life later on. Because let's be honest, most likely you're probably not gonna be in any better health than you are right now. Okay, so what makes a good policy? I already mentioned this kind of in the example I gave, but the best policies are ones that we like to design. We call them max ROI infinite banking, is where you reduce the cost by reducing the death benefit, but allowing as much money to go in with the lowest death benefit possible. So for example, if someone comes to me, they say, hey, I wanna put in $20,000 a year, what should I do? And sometimes people even come and say, well, what kind of death benefit should I get? I was like, well, it doesn't matter. What do you wanna put in per year? $20,000. Great, let's figure out the minimum death benefit you need to do so that they'll allow $20,000 to go in and stay tax-free. That's it. So how can we get the lowest insurance, the lowest cost possible to allow that money to be dumped in? We just reverse engineer it, and that's it. It's very simple. Everybody's like, well, how do I design this or this? Just figure out how much money you want to put away per year and how long you want to do that for, and boom, we can design the best policy possible. So just know that not all insurance agents are the same, and nor are the insurance companies. I've had many people come to me with the same insurance company with worse design than if I use that same company they did, but with a better design. So it's all about how you design it. How do you know? The best thing to do is shop around, right? And I encourage it. By the way, if they don't give you numbers, this is a pro tip. If they won't give you the numbers to send home to you, it's because they're scared, because they know they don't have the best design for you, and they don't want you shopping around. They don't want you to know any better. They want you to stay ignorant. Do not buy from those people. Buy only from those that are willing to be upfront, show you the numbers up front, and know exactly what you're getting into versus just trying to sell you on some crappy little, sales pitch that they have for you and say, well, we'll only give you the numbers when you get approved. No, that's not true. You can get numbers right away, and that's something we do as a practice. So now, here's the other thing you gotta understand too. You can actually invest. Now, the policy is not an investment, but you can use the money to actually invest. Remember, you're asking if this is a bad investment. Well, it's not if you know how to use it right. So if you get one, that well-designed policy, then two, you can now use this money because you have more cash to leverage. That cash value is that tax-free savings account. You can then use that to invest in other things. The reason that this is good is instead of just withdrawing the money out, which you can do, I encourage people to actually loan the money from the insurance company. Yes, you actually borrow the money, and yes, you pay interest to them. And many people ask, why do I pay interest on my own money? It's because you don't. That's the magic of it. Your money is still there. You didn't touch it. It's still earning that compounding interest that you're earning, but you're borrowing from them at a relatively decent interest rate as well. You're borrowing money from them, investing in that investment, and then taking the cash flow from that investment to then pay down that loan, so you pay less and less in interest, while on the opposite side is compounding interest. You make more money here net on the interest you're earning versus what you pay them, and you make money in the investment. You make money in two places at the same time. That is the magic of it. That's where you actually can get this money to grow faster for you, allowing you to invest more and create more income for yourself. And I recommend if you're gonna do investments with it, don't gamble it away. That's why I don't use this to buy crypto and things like that. I use this to get into cash flowing investments like real estate, or I'll invest it in my business, places where I know I have less risk and more control. Those are the kind of places I like to put my money. So you know what? Life insurance, it can be a bad investment or a good one, but it's not an investment, but it can be a great way to use your money better. If you want to learn how to make this work even more so, I actually have some great examples, some great videos I've done that you can go to moneyripples.com. Under the infinite banking section, you can check out more information there to see how this really works. How do you use it with investments, and how much more money could you actually create? Go click on that right now.